Super quick computers and advanced mathematic formulas have largely taken over trading on the financial markets from human beings. Algorithms, which seem to have a life of their own. Algorithms secretly lie waiting for the moment that your Apple share or your pension money gets on the market. The only ones who understand this system in any way are its architects, the algorithm developers.
Alrighty, cool. So we're going to go ahead and get started. We got 44 people. In today's video breakdown, I'm going to do a full overview of the entire month of April. I want to give you guys a really good, clear, concise perspective on what took place during the month of April, what fundamental drivers moved the markets. I want to make one thing clear in this community, all right? There's a lot of people, and I get that, and everybody has different opinions and perspectives, and other retail influencers on the internet and other retail influencers have different ways and means in which they trade and invest in the markets. And that's fine. Absolutely 110%. Everybody's entitled to their opinions and their perspectives on market direction and sentiment and whatnot. But I want to make one thing clear. Okay, these financial markets, these AI algorithms, these quantitative traders, these large hedge funds, these asset managers, these financial institutions, they are moving the markets based off of adjusting their algorithms to fundamental shifts in sentiment. And they're not outside in the middle of the night during moon cycles or astronomical alignments adjusting their portfolios based off of the cyclic nature of the moon. As much as people want to believe that, I can guarantee with 110% certainty and in all honesty to you guys that if you went into a large asset management firm, a family office, any private wealth firm, anything in that nature, right, in that category of institutional money, and you told them that you base your investment decisions off of moon cycles, they would laugh at you and kick you out of their firm. Now, I'm not saying that that stuff is not important because, yes, obviously, of course, there is some type of connection to the financial markets with astronomical alignments, stars, moon cycles, and whatnot. I'm not saying it has no importance, but myself and Scalper are here to teach you guys how to actually become successful in these markets intraday, weekly, monthly, quarterly, annually. Okay. And we give you the sauce in order to do that via these institutional deltas and these fundamental updates. So I'm going to show you guys in today's video breakdown the entire month of April, how you guys had these institutional dark pool deltas, these areas of interest, these trap liquidities, buy volume and sell volume areas that myself and Scalper give you guys months in advance. And then I'm going to show you all how it all aligns with price action at specific key delta zones. And you will notice in today's video breakdown, every single fundamental breakdown that came out that either pumped or dumped price action came exactly in alignment with an institutional dark pool level. All right. And so I'm not saying not to pay attention to outside resources that stem out of this community. And I'm not attacking anybody based off of your personal opinion on the markets and what moves them. But I'm here to present you guys facts, not hopium, not hype, not a retail bias. Okay. I'm here to show you guys what the institutions are doing.
When you see like massive volatility in the market, what is the chain reaction in this mechanism that you described, the risk oracle, and you also mentioned AI is utilized in that mechanism. What does that chain reaction look like when you see volatility?
Yeah, so I think there's a few things. So first, like setting the stage and how AI even is a part of this. I think early when we started the business, all of our risk models were powered primarily by quantitative signals. So we're looking at volume, price action, liquidity, depth, all these things across different markets. But oftentimes the vast majority of the time, the driver to all of this type of price action and volatility in the market is news itself. And when news breaks, now we can react to it much faster.
Super quick computers and advanced mathematic formulas have largely taken over trading on the financial markets from human beings. Algorithms, which seem to have a life of their own. Algorithms secretly lie waiting for the moment that your Apple share or your pension money gets on the market. The only ones who understand this system in any way are its architects, the algorithm developers. The only ones who understand this system in any way are its architects, the algorithm developers.
All right. And so if anybody has anything outside of that, that's fine. I'm not knocking it, but I don't pay attention to that stuff because it is irrelevant. When you zone in, when you lock in, and when you pay attention to what the banks and the institutions, the hedge funds, the smart money, the AI algorithms, the quant traders that actually move these markets are paying attention to, it becomes relatively simple. So if you guys need that type of clarity, that type of confirmation that that's who moves these markets, myself and Scalper have dropped probably over 50 video breakdowns of individuals with valid credentials telling you that to be the case. This gentleman here, for an example, he in this video breakdown, which was posted 3 weeks ago, goes on to talk about multiple different times what actually moves these markets and how when fundamentals shift, these quantitative algorithmic investors, these traders, these AIs need to adjust their positions in the market, right? And then Scalper has also shared information on quant algo traders and video breakdowns of AI algorithms that actually move these markets and whatnot. Just take the time and watch those videos so that way you're not misled to believe things that don't really actually matter in these markets, right? And you will go much farther in your trading and investing career because when moon cycles fail, delta zones and dark pools and fundamentals will not. Right now, again, I'm not saying that there is no correlation because I firmly believe that there is, right? And I do have an understanding and an awareness of moon cycles and astronomical alignments and how it all plays into detail. But if I'm telling you guys right now, like really seriously imagine yourself, okay? Imagine yourself going into JP Morgan or going into, I don't know, BlackRock and going into their portfolio management algorithmic trading floor, whatever. Okay. And you go up to them and you say, hey guys, there's a blood moon today. Are you all going to sell, dump all your positions? They'd look at you like you're on crack. Okay. And that's just a fact. These individuals on the internet, they're entertainers. They entertain people with these ideas of how the markets move, and it is false information. I would actually love to see institutional scalpers someday in the future debate any retail investor that is on the internet openly about how the markets move, and I guarantee you institutional scalper would crush them tenfold with the knowledge and information that he has on how the markets actually move. That's besides the point. Again, my goal as a mentor for you guys is to get you guys to focus on what matters, and everything else is just falls into a category of entertainment. It's fine to watch that stuff, but if you're trying to apply that to the markets intraday, you're going to end up losing more often than you win. Okay. So, another thing too, these retail fundamentals, I'm going to show you guys today. So XRP's price action is in pink here, this pink line underneath of Bitcoin's price action, because I want to show you guys that these retail fundamentals that drop, yes, they're bullish for the market environment long term. Obviously, of course, they bring eyes to the market, they bring institutional interest, and it shows maturation in this space. But another thing that we have to understand is a lot of these bullish fundamentals that we see in terms of breaking headlines that retail traders pay attention to, these are not the fundamentals that the large institutions are paying attention to. This is the type of distraction information that retail traders, again, go online, make opinionated based content, and think that this is what moves the markets. And these XRP announcements for ETFs and ETPs, which are super bullish for the market long term, I'm not knocking that by any means, and I'm here to show you guys that again, so you can get a clear understanding of what actually moves the markets. And there's a lot of people where if I were to upload this video, they would click off of it because they think that it's a bunch of nonsense, it's a bunch of bullcrap, and it's because the system is designed in such a way to manipulate you with such distracting information that the retail traders with large followers, people start to believe them because they sound credible. They sound like they know what they're talking about, but in reality, if you place them in a room with somebody that actually has hedge fund experience, that actually has quantitative algorithmic trading experience, they would look like an absolute complete beginner. Okay. So I'm going to use these today just to show you guys in correlation with Bitcoin's price action, because I'm obviously, of course, predominantly a Bitcoin day trader, but just to show you guys underneath, XRP's price action literally mirrored all the bounces, all the declines, all the drops in price action, all the pumps in price action that Bitcoin's price action mirrored. And it was all fundamentally driven, coupled with institutions buying and selling, defending their positions, battling each other in these markets. All right. So let's begin. And then once we're done the monthly breakdown for April, we'll full circle and we'll go into yesterday's New York session report, where I just give you guys a snapshot of the market overview, what we need to be paying attention to this week, because we have an extremely hefty week ahead of us as we head into the last few days of April and then rolling into May. So we'll fully break down these if-then scenarios, what we would ideally like to see a continuation in the bullish environment that we saw from April heading into May, and then what obviously, of course, we need to be reactive to if we see the inverse and we see a bearish case scenario unfold, and what our bearish targets will be for possible discounted prices and buying opportunities. Okay. And then once I'm done this, we'll kind of just open the floor to general rhetoric and commentary. I'll tap into some fundamentals and just some things that I'm paying attention to that I've recently come across in terms of central bank positioning, the overall state of the economy and what market makers are pricing in and whatnot. And so this will just be a full detailistic breakdown of everything that took place in April to get you guys to really see why it's so important that you pay attention, starting with these institutional deltas. Okay. So as you guys can see here, all these deltas, we love timestamps in this community, were put out to you guys well in advance. This is back at the beginning of April, when after Trump's Liberation Day announcement, the market had sold off and Scalper had put out a bunch of institutional buy deltas when the market was at a discounted price. Okay, just to show you guys that you had these target areas of interest on where the market could bounce from, reverse into in terms of premium areas of interest in the high 90,000 range where the markets could push price into if buyers defended their positions. Okay, moving on, let's start. All right, so going back to the beginning of April, all these fundamental breakdowns, like I said, I found as many as I possibly could. So let's cover these and break them down in detail, starting with the NFP report that we got the first Friday in April. That is extremely important because this upcoming Friday, the first Friday in May, we have yet again another NFP print. And what I'm seeing right now is that the markets are expecting a downbeat NFP report. Okay. Why it's so important that we look back at historical data and see how it affected markets previous is because we can get an idea of what to expect in terms of possible price action depending on how the data comes out. All right, so we're going to remain on the 4-hour time frame to break down and digest all of this price action. And this chart does not have the XRP chart underneath, but again, just to show you guys, right, you can see clear as day that the XRP price action almost identically mirrored Bitcoin's price action for the month of April. You can see here this drop in Bitcoin on Friday, April 4th, all the way into Sunday, April 6th. Same thing with XRP's price action. We saw a dip in price and then a recovery following that Tuesday into Thursday. Bitcoin's price action recovered. Same thing. XRP's price action recovered. And then here, heading into this Sunday, April 20th, rolling into the Monday, April 21st, same thing. We saw consolidation in Bitcoin the week before that. We saw consolidation in XRP the week before that. Then when Bitcoin broke out on Sunday the 20th, same thing, XRP broke out, retested, heading into Monday, and price action continued up. Same thing with Bitcoin. And so I just wanted to show you guys that because all these fundamentals that move Bitcoin's price action and where Bitcoin respected the deltas from on those specific days are the exact days that XRP's price action moved as well. So I wanted to show you guys that correlation because crypto in itself is all correlated with each other, right? Obviously, of course, there might be a day and a time in the future where certain assets decouple from each other, but just looking back at the month of April, so that way nobody's distracted by the retail side of things, I wanted to show you guys that correlation real fast. Moving on, all right? Let's break this down. So back to what I was saying about the importance of this week's NFP report, okay? It's important because if the market is pricing in a bad NFP report, but then the NFP report actually comes out optimistic and shows signs of strength and resiliency and pushes back on those recessionary fears, that could be an indicator that supports risk assets or eases the demand for safe haven assets and allows for an intraday environment for risk assets to flourish. As we can see here, when that data came out on April the 4th, showing a more upbeat jobs report. Intraday, in terms of price action, Bitcoin was bullish. You can see from that Friday that the data came out over until the Saturday when new fundamentals came out, the market saw a buying opportunity intraday. Again, this is a 4-hour candlestick, so you can assume in terms of scalp positions, had you have entered into those positions down at lows, this would have been a nice intraday buy. Now, what you'll notice is look at where institutions started defending their sell positions at a dark pool delta at the 84493 institutional level. And what dropped the Saturday following? Well, you can see here, Saturday, April 5th, 2025, the US market dropped Friday after China announced retaliatory tariffs of 34% on all goods from America. And so the day after the upbeat NFP report, we saw China announce retaliatory measures at the beginning of April that sparked fear, uncertainty, and doubt, created way more demand for safe haven assets, and investors started selling their buy positions. Sellers came in, overpowered buyers, and we started to see a market dump, right? The market dumped. Where did it dump all the way down into? It dumped straight down into the institutional delta at the 75490. Then we saw a double bottom formation where buyers came in at the 75490. They came back to retest and buyers defended their positions. So here, sellers tried to show their hand again and overpower buyers. However, they failed. Buyers were able to defend their position and overpower sellers. And what fundamental report, interestingly enough, came out at that same exact area where price action retested the dark pools? Here you can see it. On April 8th, President Donald Trump announced a 90-day pause on all reciprocal tariffs, with the notable exception of those imposed on China. This move marked a significant shift in the U.S. trade policy, as Trump had previously insisted that these heightened tariffs would be permanent. The pause applied to tariffs that had gone into effect at midnight, with the White House confirming that during the 90-day period, tariffs on nearly all U.S. trading partners would drop to a flat 10%, right? So you can see the announcement of the tariff pause excluding China led to a positive reaction on Wall Street, with markets surging on optimism for broader tariff de-escalation. And again, you can see how this price action is not correlated with moon dates or half moons or astronomical alignments. It is correlated with institutional dark pools and fundamentals. So sellers tried to overpower, buyers defended their positions, increased their buy positions to overpower sellers, and push price up into another institutional delta, where then they started offloading their positions. Sellers here, this dark pool, started defending again. As you can see, this is where sellers were increasingly selling their positions before. And then we saw the market pull back. Now, where did the market pull back to? We did not pull back into a dark pool. We simply just pulled back into a buy delta. Okay, that is indicated by this blue line. And what fundamentals came out? Well, let's go in and look. On Thursday, April 10th, the same exact day that the market pulled back into a buy delta for buyers to defend their position, we got lower core CPI. We obviously, of course, know lower inflation usually tends to lead to increased probability of interest rate cuts from the Fed. Increased probability of interest rate cuts from the Fed, historically speaking, has benefited risk assets. Okay. Following that day, so you can see again, just looking at the dates, I always want to make sure that you guys can see. Look at the dates down here at the bottom. This was Thursday, April 10th. You can see the dates down here at the bottom of the charts. That is exactly where buyers came in. Sellers tried to overpower. Buyers defended their positions at the delta, and buyers won, and they continued to push price higher. Where did they push price into? Back into deltas. Then, following the next day, Friday, April 11th, we yet again got more fundamental news. And that came in the form of PPI figures. And same thing in terms of the CPI, we got continued disinflationary trends in the PPI figures. That again supported the rate cut narrative and flipped risk assets bullish, right? And again, we can see, I'm going to continue to say and again, so I apologize, but price action came into a delta at the same exact time that the fundamentals were released. Buyers defended their positions, adjusted their algorithms, and continued to increase their bullish bets, right? So that was pretty much the beginning of April. That is primarily why we saw the market turn around from the first week of April, where we saw extreme and extensive market turmoil. Mid-April, so pretty much from Sunday, April 13th, up until about Sunday, April 20th, we saw consolidation. As I showed you guys in the XRP price action, the same exact dates that Bitcoin was consolidating from that Sunday, April 13th, up into Sunday, April 20th. Remember, XRP's price action is this pink line right here. XRP's price action did the same exact thing. We just consolidated. And then here, on the day that Bitcoin broke out, which was Sunday, April 20th, again, price action. This was last week's low, by the way. That's going to come into play as we do our technical analysis moving forward. But price action, sellers tried to overpower buyers, add a dark pool delta. Data came out, fundamentals came out, a shift in market sentiment. Keep in mind, all the previous week's price action was consolidation. So what was the market doing? What is the market doing when it's consolidating? Algorithms, these institutional traders, they're waiting for data to adjust their positions and shift momentum. And you can see here, Sunday, April 20th, 2025, there was a notable positive development in the ongoing US-China tariff dispute. President Donald Trump signaled a significant shift in his administration's trade policy by announcing that the exceptionally high tariffs on Chinese goods, recently raised to 145%, would come down substantially, though not zero. This announcement marked a potential de-escalation following weeks of escalating tariff measures and reciprocal actions between the two countries. So this was seen as an extremely optimistic announcement, right? Even though nothing was solidified, we can see how the algorithms broke out of that consolidation. Buyers defended their positions at a delta, created the weekly low from last week, and increased their bullish bets. Trading from delta to delta. Where did the market start to stall out again? Not based off of any moon cycles or anything like that. It started to stall out and consolidate at another dark pool, 87516, right? Then, how did the market break out from this delta? We broke above, we came back, sellers tried to defend their positions from where they previously sold from here in this area. However, buyers overpowered, sellers exhausted, and buyers were able to overpower sellers and push price higher. But what fundamental came out? Well, let's take a look. The dates don't lie. On April 21st, the next day, we had positive tariff talks between Japan and the US. Japan and the United States reported positive momentum in their ongoing tariff negotiations. Both sides agreed to accelerate discussions with the goal of reaching a quick resolution. US President Donald Trump described the recent ministerial level meetings in Washington as a big progress. And the Japanese officials echoed the optimism about building on these talks in the coming weeks. And so sure enough, the same exact date that those fundamentals dropped is the same exact date that we saw price action correlate with the institutional dark pools. Buyers defended, overpowered, and pushed price action up higher. That leads us into where we kind of currently stand today. So the market rallied all the way up into roughly about Wednesday before we started to pull back. The next area of interest where the market found support, buyers again defended their positions, and we pushed price higher one last time. We can see fundamentals yet again mirroring this price action. So on April 24th, which is the same exact date, it was a Thursday. Look down at the bottom of the charts. Everything's correlated. We saw Russian officials reiterated their willingness to enter peace negotiations, but set strict conditions. A Kremlin spokesperson, Dmitry Peskov, and Security Council Secretary Sergei stated that Russia would support a ceasefire and peace talks only if its core demands were met. And we know, based off of historical price action, when there is peace negotiations or a possibility of de-escalations in geopolitical tensions or tariff talks or anything that has previously created market uncertainty, that tends to increase bullish optimism in risk assets. Large investors that actually move these markets have a much higher appetite to take aggressive buy positions on risk assets. Not only that, but the same exact day, on April 24th, 2025, China publicly urged the United States to cancel all unilateral tariffs as a step towards ending the ongoing trade war. This statement came amid signs of diplomatical maneuvering and was widely reported as a significant gesture from Beijing to de-escalate tensions. Now, along the entire way of all of these fundamental reports, which you can see correlate with not only deltas, dark pools, and fundamentals, here in this community, we updated you guys on all of these if-then scenarios well in advance. If you go back and you look at all of our price projections, we had projected that Bitcoin, under these types of market conditions, would continue to trend upwards. Anybody that joined our Zoom calls or watched our recordings knows that to be a fact, right? And so now that we are sitting up here at these highs, at these premium areas, what are we seeing? If you go into the Bitcoin Delta area, you can see Scalper has been updating you guys on all of these buy and sell volume areas, right? And so right now we're seeing sellers attempting to defend their positions. There have not been any supportive fundamentals today that would ignite extremely optimistic perspectives in the market or support extremely bullish price action. And so we can see not only are most likely buyers from previous areas of interest where they were buying from taking positions and securing profits, but sellers are now defending their positions on the daily time frame at highs, which we can see over here to the left-hand side. Okay. So that now puts us into the last couple days of April, heading into May, what we need to be mindful of and paying attention to, digesting the April 27th New York session report and going over all these if-then scenarios. But in a nutshell, right, I simply, in this overview of April, wanted to show you guys that had you have been paying attention to moon cycles, keep in mind, right, that there's only one full moon during the month of April, okay? Had you been paying attention to things that retail traders, in terms of, let's say, you know, all of the XRP ETF announcements and everything like that, you based your trading decisions off of those things, you would have been a lot less accurate than had you have paid attention to the institutional deltas that we give you in advance, way before price action comes into fruition, and then couple that with reading on a daily basis these fundamental reports, and then looking for price action setups day by day, okay? That is how you become successful at these markets, not by guessing. So just make sure that you guys are tapped in. Make sure that you guys are educating yourself. I'm not telling you all to not study astronomical alignments and moon cycles and everything else that retail traders are talking about, because yes, that stuff, especially when it comes to spirituality, is important. It's very important. And humans, we definitely have a huge inclination to be aligned with astrology and the moon and the earth and the sun. And it is very important to understand, especially when it comes to our historical, you know, nature of being a human. But in terms of the markets, I can 110% guarantee that if you went into a financial institution and asked them, and you presented this information that I just presented to you, they would actually be like, wow, you sound like you know what you're talking about. Whereas if you went in and you were like throwing them gematria and all this crazy stuff that retail entertainment's talking about, they'd literally probably kick you out. They call security and escort you out very quickly. Okay. So, and I'm trying to work with Scalper to see if we can get one of his mentors that has hedge fund and institutional experience to come and talk to you guys. We also have some people, Christian, for example, in the chat, who has worked at a brokerage firm, to come in and confirm this stuff for you guys. Individuals that have actually had physical experience in these institutions tell you what they pay attention to. And I guarantee you they're going to tell you this stuff, right? So I'm just here to show you guys facts and get you guys aligned with how to become successful, not entertain yourselves. This is not, we're not here to entertain you guys at CYPRX. I'm here to teach you guys how to make freaking money. If you don't want to make money, then, you know, that's a personal whatever. I don't know what to tell you. But I'm here to make money, and I'm here to teach people that want to make money how to make money, you know? So if you want to make money, tap in. All right. Moving on. Let's go over what to expect this upcoming week. I'm just going to read this from top to bottom, and then we'll kind of go into detail towards the end to what to pay attention to this upcoming week.